Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today's video is long overdue. It's an update that many of you have been asking me about in the comments, and we're going to revisit Navy Federal Credit Union certificates. But this is not a simple refresh. This is a full 2026 update. Interest rates have moved. Inflation has reshaped the way that people are thinking about saving, and high yield savings accounts have exploded in popularity for a time, and since they have fluctuated, with top options yielding around 4% to 4.6% APY at the time of recording this video, still significantly outperforming the 0.61% national average that you get from your bank account. And because of all that, the role that certificates play in a smart financial strategy has evolved. So today, we're going to break down everything you need to know about Navy Federal certificates in 2026, what they are, how they work, who they're for, who they are not for, and most importantly, whether or not they still deserve a place in your financial system today. By the end of this video, you're going to understand exactly where certificates will fit in a modern wealth building strategy. So without further ado, let's get right into the video. Let's start at the very beginning, because before we talk about Navy Federal specifically, we need to understand what a certificate actually is and why it exists in the first place. A certificate, specifically a share certificate and a certificate of deposit, a CD, they are nearly identical in function, both acting as a safe, fixed-rate, time-bounding savings instrument. The primary difference is the institution. See, banks issue CDs, paying interest, while credit unions issue share certificates, paying dividends. Both are federally insured up to $250,000. A Navy Federal certificate is the credit union version of what most banks call a certificate of deposit, also known as a CD. Just want to make that distinction. So at its core, again, the concept is extremely simple. You deposit money and you agree to leave it untouched for a fixed period of time. In exchange, the credit union guarantees you a fixed rate of return. That word guarantee is the most important part of this entire conversation. When you invest in the stock market, nothing is guaranteed. When you invest in real estate, nothing is guaranteed. Even when you leave money in a savings account, the interest rate could change at any moment. But when you open a certificate, the rate is locked in from day one. You know exactly how much you will earn and exactly when you will earn it. In an unpredictable financial world, certainty does have a lot of value. And this is where a lot of people misunderstand certificates. Certificates are meant to stabilize your financial foundation, while your growth assets do the heavy lifting. Now, this is a huge mindset shift that most people miss. Certificates are not competing with stocks. They are not competing with real estate. They're not competing with starting a business. They serve a completely different role. They protect capital, they provide predictability, and they reward patience. And when you start thinking about them in this way, their purpose becomes much clearer. Now let's talk about the most important concept when it comes to these certificates, and that is the maturity date. When you open a certificate, you are choosing a term, and this term could be a few months to multiple years or even longer. Now, the maturity date is the finish line. It's the day that your commitment ends. When you reach that date, your certificate will mature and you will get your original deposit back, plus all the interest or the dividends that accumulated during that term. So in the case of Navy Federal, you have terms that range from 3 months to 7 years, depending on the type of certificate that you choose. But here's the key detail. If you withdraw the money early, there is usually a penalty, and that is the trade-off. The credit union is rewarding you for your commitment, and in exchange for that commitment, they offer a guaranteed return. Now, this structure does something incredibly powerful psychologically. It removes temptation. Money sitting in a savings account feels too available. It feels spendable. It feels like it's a part of your daily life. But money that's sitting inside of a certificate feels different. It feels locked away, and it feels very much intentional. This mental separation is one of the most underrated benefits of having a certificate, because the biggest threat to most people's savings is not the market or volatility, it is impulsive spending. Certificates create a barrier between you and your future money. Now let's talk about what happens with your certificate when it matures, because this is where flexibility comes into play. Now, when the maturity date arrives, you have options. You can cash out the money and use it for a goal. You can move the funds into long-term investments, or you can renew that certificate and continue earning interest. And this makes that certificate extremely useful for goal-based savings. If you know you want to buy a car car in 2 years, then maybe a certificate can be perfect for you. Or if you're saving for a down payment on your home, then it can also be perfect for you. If you want to protect a portion of your emergency fund, then this may also work for you. It just depends on what your goals are and what you're looking to actually do. Next, we need to answer a big question. Why would you want to use a certificate in 2026? Because for years, people would dismiss them as being boring or too slow or too conservative, too old school. But the financial landscape has changed. Interest rates, while they are being cut, are still fairly high. And then these fluctuations can happen again. Suddenly, when there's something like a guaranteed return, that becomes very attractive for people. One of the biggest advantages of certificates is the protection against falling inflation rates as well. Savings account rates will drop overnight, while certificates are locked. So while interest rates go down, technically you'll see high yield savings accounts go down, things like that. But when you have a certificate and you have it locked in, your rate is guaranteed, your return is guaranteed. Another major advantage is the risk. They are one of the lowest risk financial tools that are available. There is no market volatility. There's no surprises. It's very easy. But let's be honest, a certificate will not outperform stocks or real estate long term, but they're not supposed to. The other advantage that you have with this is very much so tied to Navy Federal. Having a certificate with them can increase your internal score. Now, I do have a video about how I learned to increase your internal score from a Navy Federal employee. I'm going to link that video right here if you want to watch that. And if that was your goal, that video would definitely be helpful to you. But the most important thing about a certificate is that they are stable. They are a stability layer in your financial system. A well-rounded financial strategy will include growth assets and stability assets. That is where certificates live, on the stability side. Now, Navy Federal offers 3 main types of certificates. Each one is designed for a different type of saver and a different financial situation. The first one is the standard certificate. The second one is the Easy Start certificate, and the third one is the Special Easy Start certificate. Now, understanding the differences between these is critical because they serve completely different purposes. Currently, we are on NavyFederal.org, and in particular, we are looking at the certificates. Now, you can find this under checking in savings. Of course, it's going to be considered a savings account. Now, if we scroll down right here, we can see available right now at the time of recording this video, 13-month special certificate, share IRA, ESA, and you can accelerate your savings with this short-term high potential certificate. This is a limited time offer that features an outstanding rate that's more than 2x the national average. You have to deposit $50 minimum. Now, this is an offer again that's going on right now. I'm going to pass this one up and we're going to take a look at the first one, the standard certificate. Now, this one allows you to plan out your savings by providing guaranteed returns like we talked about. And this is best for individuals who want to earn a higher dividend rate, individuals who don't need flexible access to savings, and individuals who are interested in making a single deposit. Now, the APY shown here is 3.80%, but remember there's that offer going on for that one that's 4% right now. This one has terms from 3 months to 7 years, and you have to deposit a minimum of $1,000 in order to get started. Now, if we click on Learn More here, you'll get a little more information about what this can look like. So for a 3-month term, you'll be looking at 1.35%. That's going to be on $1,000 minimum. And then if we look at, of course, 20K minimum, we have the 1.35%. This is for 3 months. And then 100K, 1.40%. Now, of course, the longer the time frame, 12 months, 18 months, 24 months, the more that you'll be paid out. So in the case of the 12 months, this is probably like the best one that you're going to get. On $100,000, you can get 3.80% right here. Now, once we go past that 1 year time frame, 18 to 24 months, while it's still high, it will drop slightly, simply because the landscape of interest rates will change. And depending on that, they want to make sure that their guaranteed rate can still be something that is actually profitable. Now, that's normal. You will see this with every certificate. You'll see this with things like T-bills. It's very average when it comes to this particular industry. Next, we have the Easy Start certificate, and the Easy Start is an easy way for you to start building your savings quickly with a low minimum purchase and flexible term length. Now, this is if you want to start with a lower deposit minimum. So for this one, it's best for individuals to save for, let's say, a specific goal. individuals who want to build good savings habits, and someone who wants to add money at any time. So that's the difference with this one. You have terms from 12 months to 24 months, and the minimum is $50. You can also add money again at any time. Now, for a lot of people, I think this is the one that they're going to actually be looking at. Again, it's more flexible. The APY is higher. They have terms from 12 to 24 months, which is still long, but not too long. And if we scroll down here, then we could get a better idea of what the rates are going to be right now. So for 12 months, then we get 3.70%, 18 months, 3.60%, 24 months, 3.45%, and you can renew it up to 21 days after the maturity date. Then if we look at the special Easy Start certificate, you can add money at any time. $3,000 for the maximum purchase, requires checking and direct deposit, so that is important, and limit to 1 per primary account holder. 4% APY, 12-month term, and of course that low minimum deposit amount. And this one works in 4 easy steps. You get started, you can open it for as little as $50, and then you set it and forget it. You can have weekly automatic deposits for, let's say, $10, and then you watch your money grow. After a year, your $50 would grow into $560 plus any earned dividends. And then you keep on earning. At the end of that term, you can renew it up to 21 days after the maturity date. And then the last thing that I want to show you is this calculator. So how much will my certificate be worth at maturity? So let's say that you start with an initial deposit of $10,000. It lets you know at the maturity date on February 18th, 2027. So that would be 1 year from today. You would then have $407. So essentially, when you think about it, if it's a 4% interest rate, you're basically looking at $400 from your $10,000. And you could play with this calculator to look at if you put like ridiculous amounts, $100,000, and of course it's $4,000. So for someone who, like, let's say you had your money inside of a bank account and you did have $100,000. I know that's not everyone, but let's just say that you did. For someone who has money just sitting there and you don't know what to do with that, just imagine earning an additional $4,000 just for doing absolutely nothing. Or, I mean, even as small as $400 for doing absolutely nothing with your money if it was going to be sitting. That can be very helpful, especially if you're looking at, using this money for a specific goal at a specific point in time. I want to thank you guys so much for watching this video. So are Navy Federal certificates really worth it in 2026? Yes, but only when used correctly. They are not wealth builders, but they are wealth stabilizers. They are perfect for short to medium term goals and protecting your cash reserves. Now, if used correctly, they can strengthen your financial foundation while your investments create long-term growth. They can also strengthen your relationship with Navy Federal if that was your goal as well. Drop a comment and let me know that you made it to the end of this video. And also let me know if there's any other Navy Federal products that you would like me to go over in this year. Once again, thank you guys so much for watching this video, and you have a wonderful day.